I think a lot has been said about this is the season when the market is likely to flatline a little bit. Your thoughts, particularly for the consumer companies and what to expect? We're in the holiday season. The fourth quarter is usually the best, I think, for most of these counters. But this year, I think, may not be perhaps the best of the fourth quarters we've seen in recent years, given the flood, given inflation where it is, and of course, the broad slowdown in GDP.
Without a doubt, Wole, I think that one of the most interesting things with the market, with the Nigerian market, especially from a diversified point of view, is that you're able to look out for growth in specific sectors at specific times. Unfortunately, we don't have any of the big retailers listed on the exchange
that would easily reflect
the flow in the market. But I think that you can almost see a flow through from the FMCGs directly through FMCGs, the breweries, festive period. You expect a lot of celebrations. So the likes of, we'll watch out for the numbers from the likes of Nigerian breweries, Guinness, Lever Brothers, Unilever, and all of those guys. The key issue for us has to be that it's been a very difficult year for the consumer. Like you mentioned, inflation has remained stubbornly high, even though core inflation has started to moderate a bit. In addition to that, the Naira has sort of, stabilized in 2012, not the sort of, volatility that we've seen in the previous 3 to 4 years. And the last issue for me that probably would impact on consumers is also the interest rate direction. The continuous retention of the 12% MPR by the NPC are key issues that will drive consumer performance in the fourth quarter of the year. Now, I think that what we will like to focus on, obviously, would be what happens within the middle class. That's the key economic driver, especially for that sector of the economy. And it's going to be very interesting to see how people react to things that we naturally haven't seen in the Nigerian market. So you haven't seen retailers offering deep discounts, Christmas sales, and stuff like that. It's an interesting period. In the US last week, or in Europe as well, people talked about Black Friday. And then there's now Black Cyber Monday, and stuff like that. I think that over time, we're going to see those sort of events start to impact on the Nigerian market, and it could be interesting for the retailers.
Absolutely. But moving on to some news flow in the market, I think we have to start with the stepping down of Bolanle Onogoro. I think a lot of people said they saw this coming, given what we're hearing about the Manitoba Manitoba Transmission Company contract. So for you, was it also a surprise, and what do you read into this? There hasn't been any official reason for this.
Not necessarily a surprise. Well, I think from my perspective, the bigger challenge has to be that there's no continuity in government. It's frustrating from an investor's point of view. You look at the power sector, for example, which is critical to everyone today. As of today, we don't have a substantive Minister of Power. The NERC is still in some form of limbo. BP, who probably had some form of structure around it, now suddenly doesn't have a head. Now, from an investor's perspective, that isn't good at all. Because you want continuity in policy. You want to be sure that you're seeing the same face that you saw yesterday.
But some people may argue, especially when you take it back to the discussion around the power minister, that his stepping down then was perhaps to protect the integrity of the process. So perhaps that is the case in this case as well.
Whether it was protecting the integrity of the process or not, the reality is that we've gone a couple of months now without a substantive minister. Now, from an investor's perspective, that is just uncertainty that's totally unnecessary. If it's taking us this long to replace the minister, and then now you've got a BP head, and there's still a lot of noise from the National Assembly around the SEC DG as well. The reality is that the financial sector requires a bit of stability at this point in time, and that stability is not being provided by this continuous change in leadership from the key institutions. Now, if someone has infractions hanging over them, the reality is deal with it decisively and let people move on. But you've allowed the DG of the BP to midwife the privatization process, especially for the power sector, and right in the middle of the start of negotiations of SPAs and all of those things, you suddenly yank that person off. It just can be a bit disconcerting for an investor.
Okay, let's move on to Sanusi Lamido Sanusi. I think he's broadly in the news every other day. And the latest, of course, has been the calls around fiscal consolidation, the federal government trimming its workforce. I mean, I guess it's a difficult argument because I think some have suggested that, look, if you sack these guys, the unemployment rate moves up. There are actually implications for the economy itself.
Absolutely.
On the other hand, there's also the argument that we need more funds to channel to
let me give you some interesting statistic. I was reading a book recently, and in 1956, right, the Western Nigerian government, the budget had 21% recurrent expenditure and 79% capital expenditure. And if you look at the sort of growth that the economy was able to deliver and sustain during that period, it was phenomenal. The reality is that Nigeria's budget is an embarrassment from any way you look at it. We spend almost 70%, 75% of our budget on recurrent expenditure, paying the salaries of civil servants. Now, the reality from our perspective is that, look, what impact has the civil service got on growth for the economy?
Okay, I hear you. I think a lot of people actually agree that this is something we need to do. But I guess, and I think more of the rhetoric we're hearing, especially from the finance minister, is that this has to be a gradual process in terms of fiscal consolidation. We're not likely to move from 70% to 50% overnight.
Absolutely.
So
absolutely.
I want to believe you agree with that.
I totally agree with that. I think we can't do this knee-jerk reactions, shooting from the hip all the time. We can't afford to do that as a country. But the reality is that there's got to be a plan towards reaching that objective of saying that, look, we've got to cut our recurrent expenditure. The economy is suffering unbelievably from a lack of infrastructure, and you just don't have the cash to do it, simply because you're paying, 1.5 million people in the civil service, from the local governments to the state governments to the federal government, the National Assembly, the political appointees. It's just unwieldy for any government. All
right, let's move on back to the markets. And I remember you did call that this market is likely to be flat early this year. Clearly, it's going to beat that. It's going to outperform that by a mile. But moving into 2013, I think some people may begin to start forecasting. What are your thoughts on how this market is likely to perform? It's not about, what, 26% year to date? Many people think it's likely to stay around that for the year. So 2013, what kind of returns are you anticipating? I think, and before you move to that point, I think it's important to identify that the consumer stocks in particular seem pretty rich in terms of their valuation. So if we're going to really see this market move, it's more likely to be in the financial services space.
And I think you picked my thoughts right there. The reality is that 2012 has been a fantastic year for the market, given where we expected or where we started out the year and the challenges that we saw. There were possible constraints for the market. The reality is 2013, from my perspective, is going to be a consolidation year. There are stocks that are trading at very rich valuations today. And I always say to people that the reason why those stocks are trading at such rich valuations is because the breadth of the market is just so shallow. And the depth of the market as well is just so shallow that any significant investment that comes into the market has the intention or the possibility of being dislocated.
Listings, of course.
I mean, look at it. The Shanduka transaction with MTN, that's 335 million. That's 50 billion naira. That is a month of trading on the Nigerian Stock Exchange. That puts it into perspective for you. That if anyone, imagine if Shanduka brought $335 million to the Nigerian market as an investment, the market will be trading at 30,000 in a very short period of time. Because of that lack of breadth in the market, it just means that little bit of capital that flows back into the market.
But what do you think is
has this long-term impact? I think that the banks need to show a bit more consistency in their growth numbers. My concern is that the economy is struggling. Will banks continue to be able to deliver those stellar numbers in a constrained growth environment. That is the challenge. And if you look at the banks,
what do you think is likely to happen?
I think the banks have split in half, and that's what we saw even in 2012. The top tier banks are going to continue to shoot the lights out, but the mid tier to low tier banks are always going to deliver, your 20 or 20%. And I think for me, that's an opportunity.